Happy Monday, everybody. I hope you had a great weekend. As we kick off October, the markets are still defying a lot of uncertainty. Even with a government shutdown, mixed labor data, and oil prices falling fast, stocks quietly climbed through midweek, posting four straight record closes before cooling off a bit on Friday. Today is October 6, 2025, and this is your first October edition of the Monday Market Update. Let's break down what happened last week day by day, what it means, and what to watch for this week. We started the week on a positive note. Pending home sales jumped 4%. That's the biggest increase in 5 months, and that sparked some optimism about a new housing cycle. Now remember, housing drives a lot more than just home builders. You get a ripple effect through the economy, title companies, furniture, renovations, moving services. So strength here is a good sign. Investors looked past the shutdown headlines and have focused instead on that data and a small pullback in yields. By the close, the Dow was up a quarter of 1%, the S&P was up a quarter of 1%, and the Nasdaq was up a half of 1%. Gold continued to push towards new high. That is a reminder that even in a strong market, investors are hedging risk. Tuesday gave us a mixed picture. Consumer confidence slipped, inflation expectations ticked up a bit, and shutdown odds were climbing. But this was also quarter end, and we saw a familiar move, fund managers squaring the books and buying leaders into the close. That helped all three indices notch fresh records again. The Dow was up a quarter of 1%, S&P up a third of 1%, and the Nasdaq was up a third of 1%. So even with concerns about valuations and policy, the bid for stocks remained strong. Wednesday's where it got interesting. The shutdown officially began, but markets shrugged it off. We got ADP private payrolls, and they showed a surprise drop in jobs, adding to that soft landing narrative. The economy's cooling but not collapsing. Meanwhile, the ISM manufacturing report stayed in contraction, but it was stable, and long-term inflation expectation nudged just a little bit higher. Still, with yields easing and gold near record highs, investors stayed comfortable. The Dow was up a tenth of 1%, S&P up a third of 1%, and the Nasdaq was up almost a half of 1%. That gave us four straight, so that's good going across the board. Now, Thursday was quieter, but it was cautious. We got more confirmation that the labor market is softening. That ADP report and then the Challenger jobs cuts both showed hiring slowing and layoffs rising. With the official BLS jobs report delayed by the shutdown, traders had less data to lean on, so the other non-government reports are all we have to go on. Many are tempted to say that these are better, but even most of these companies have said that missing the government numbers is problematic. Gold climbed again, oil fell on OPEC plus rumors, and yields eased slightly, all hinting at a market positioning defensively. Still, stocks managed just small gains. The Dow was up a quarter of 1%, S&P up a tenth of 1%, and the Nasdaq was up a half of 1%. Friday was a breather day. No major reports since, as we said, the BLS report was due, but it was shut down. But the shutdown stopped that. Lighter volumes and some profit taking after 4 days of gains. Tech names like Palantir, for example, sold off, dragging the Nasdaq slightly lower, while healthcare and utilities held firm. By the close for Friday, the Dow was up a half of 1%, S&P was flat, Nasdaq was down a quarter of 1%. For the week, the Dow and the S&P each up 1.1%, the Nasdaq up 1.3%. So even with a shutdown, weakening labor signals, and falling oil, the market found ways to push higher. Why is that happening? Because yields drifted lower, inflation looks contained, and AI and housing optimism continue to support sentiment. Gold strength did show caution under the surface, but for now, buyers have still have the upper hand. Few big theme takeaways for the week. Now, as we know, the shutdown delays the data, which means investors are trading off of tone, not numbers. Labor cracks seem to be deepening, softer hiring, rising layoffs. Now, those layoffs, they are starting to show. We've been watching for a while the hiring slow, but the companies have been slow to lay off workers. We're now starting to see a bit more of that. Oil weakness. This points to slower growth or easing demand. We're also seeing more supply come to market, so something's not adding up, not just yet. Gold near highs. Again, this one looks like investors are putting on a hedge against uncertainty. So much for the gold trade being dead. Fed optimism, lower yields keep valuations afloat. We'll have to see. One of the big questions will be if the lack of government data due to the shutdown will put the Fed on the sidelines. And even so, does the market care? The direction is seemingly known, and that's what matters to the markets. It's a fragile balance, but for now, the market's message is simple. The soft landing still seems to be in play. Let's look to the week ahead. This week is all about Fed speak and those Fed heads. With the shutdown delaying reports like CPI and the jobs, the tone from policymakers will set the pace. Nothing much today from the Fed. We will get an open AI conference and maybe some new features in ChatGPT. Then we get going. Tuesday, we get Bostic, Bowman, Moran, Kashkari. Plus, we'll get consumer credit. Wednesday, we'll get the FOMC minutes, a key read on how close the Fed is to further cuts, and we'll hear from Musalem and Barr. Thursday, we'll get a pre-recorded message from Powell. We'll get Bowman and Barr again, and then daily. We'll also get Treasury Secretary Bessent speaking. We will not get jobless claims as we usually get there, again, due to the shutdown. Friday, we get University of Michigan sentiment and more Fed remarks from Goolsbee this time. So while we won't get any data to decipher, we'll hear the Fed heads testing the waters. We'll also hear some earnings from Pepsi, Levi's, Constellation Brands, while Amazon Prime Big Deal Day kicks off. So that's going to be a helpful pulse on how the consumer spending is going. Expect lower volume, more volatility, and headlines, and a lot of parsing of Fed language. Bottom line, 4 record closes and a cautious Friday tell the story. This market wants to move higher, but it's becoming more selective. AI remains a tailwind. Housing shows life. Labor's cooling. Oil is falling, and gold is shining. Signs of a slower but steady economy. Now, before I close, I'd be remiss to leave out the 2 possible big news items that may pop up. We may get the government back to work, and we may see movement in the Middle East peace process. Both of these may move markets, but we'll have to see. In weeks like this, the plan matters more than the noise. Short-term swings don't change long-term goals. Stay focused, stay diversified, and let's keep watching the big picture together. Thanks for tuning in. I'll be back Friday with more planning ideas. Until then, have a great week and keep planning.